Good morning, everybody. It is Wednesday, March the 27th. Tomorrow is the last day of the week. Thus, anybody looking at the March 28th options, it will look a little different because there is no Friday. Thus, they are a lot cheaper than normal. And I don't believe there has been an alert out on the March 28th other than the SPX credit spread for the week, for the weekly candle. Going into today, it is very, very quiet. We have the 30-year mortgage rate, mortgage applications at 7 a.m. And then at 1 o'clock, we get the 7-year auction. That's it. Tomorrow, we get GDP, jobless claims, and the secret powerful punch core PCE at 8:30 in the morning. After that, we get the Chicago PMI at 9:45, the University of Michigan final for the month of March sentiment. A little bit of home stuff, a little bit of this. 11:30, we get the 4-week bill auction, and then everybody goes into the day off being Friday. And on Friday, you get the PCE core. We're getting on tomorrow PCE prices. On Friday, we get the PCE price index, the core PCE price index. You also get consumer spending on Friday. And at 11:30, you get Jerome Powell speaking on Friday while the market is closed. So something for you to be aware of, as April 5 has been a pretty major discussion during the course of this week. Show you real quick here. Yesterday was terrible. 10-point range. There you go. You got into your final hour and you got your rug pull. NVIDIA down 2.57% on the day. Tesla, the only stock that was green on the entire day. And we finally got out of that 20-point range. 20 points, 16 points, 13 points. Yesterday we got 31.74, which is still fucking small. But we got 3 red closes in a row, and we are still in the 5200s. 5 closes in the 5200s. When I went over this, I was on over it showing about how you get into these century marks and then you get a dip out of the century mark down into the prior century, meaning out of the 5200s into the 5100s. We haven't gotten it yet. Point your fingers, do what you want. We haven't gotten it yet. We are no longer closing plus 10% year to date. We are still plus 31% year over year. We are up 2% for the month of March, and we are still 138.85% above the COVID lows. Doesn't matter for some people, matters for other people who have that further out, longer vision. But I bring you here to the spreads, and I'm starting from the October 2022 bottom and going over the spreads. And cruising down, you can go ahead and go through the track record. Everybody that's asked about it that isn't or is a member that hasn't been here that long, the wins stack up. That's just the way that it is. But the reason I'm scrolling through here is I keep track of our plus 1% days, our minus 1% days, as well as our safe edges, and when our safe edges get tagged, when they get hit, when they get broken, and the purpose of why with the column in between so that I know what was going on. And here we are into January of 2023, and you can see the volatility there, plus 1%, minus 1%, plus 1%, minus 1%. You know, we had some good things going on back then, and there was nothing that I needed to really track until we got here after the big bounce off of the March bottom that we knew we were getting the bounce off of the big March bottom in 2023. And you come into this period here, March 24. coincidentally, the anniversary date of the dot-com high back in 2000. And we went on a streak of 20 consecutive sessions without a minus 1% decline on the SPX. Intraday, a minus 1% move intraday. The very next day, we got it, 40.95, when First Republic Bank crashed. Then it got back to normal, little here, little there. Had a little streak here going into the month of May until when Jerome McCarthy said we got a deal. Then Jerome Powell came out, then spoke the next day, didn't do anything to help it. We were still getting red days. And then over here in May is when NVIDIA invented AI. And that was when we kind of really took off from that 4100 area. But again, nothing that I was really worried about keeping track of. And then all of a sudden it happened again over here in the end of May when NVIDIA invented AI, a little better part of a year ago. We went through May and we went through June. We went into July and we had 27 trading sessions without a minus 1% decline until we finally got it there on July 6th. Went again into another streak as we went into the July of 2023 highs over there at that 4607. And we had 18 trading sessions without a minus 1% decline. And as we went on from there, I forget what this 67 is, but I will look it back up and see why did I tally that. 1698 and 1631. 1631 being, where am I? I can't give you the answer to that as to why I have that highlighted. But anyway, I'll keep on going. I don't want to waste your time. Volatility, August, September, into October, volatility, and again, 3 red months in a row as we went into the Israel invades Gaza bottom at 4103.78. And then again, we went on the streak. We went on the streak where it just went, obviously, we were bouncing. We were talking about rate cuts being priced in, 5 and 6 for the year of 2024. We had a 25 trading session run without a minus 1% decline. And you can remember the amount of energy and the amount of euphoria that we were involved in back then in October into the better part of November until December 1st. And then things kind of went to normal. You'd have a couple of weeks without it, pretty normal as far as things go. And then we went into 2024. And as we went into 2024, we had 17. From December 20th until January 17th, we had 17 trading sessions without a minus 1% decline. And again, looking over on the right, trying to see whether these guys know what they're doing when it comes to credit spreads. And again, these little red marks, these are the risk trades. Safe trades are there, but, the risk is where your money is. And nothing really taking place here, February and into March. However, March 5, last time, we had a minus 1% decline. That was over here when we bottomed there at 50.5682. Today is trading session 16 without a minus 1% decline. So head on a swivel, eyes wide open. A linebacker is going to come out of nowhere and he's going to break your fucking ribs if you blindly expose yourself to the upside. We are 16 trading sessions now without a minus 1% decline. Today, after today's close, it will be 16. QQQ, nothing really to discuss other than the fact that you have not come down to that fake print, and I will run over the charts with you here very quickly, hoping to avoid needing to do a video tomorrow being the big holiday over here. We have a gap at the moment of about 17 points, and we are right up here around 50.28, 52.28, apologies, over on the SPX. And again, just because we keep track of these things, this is now the third gap to be filled, with all of them having been filled since we broke into the 5200s. 60-point range we have been in here, less than 60 points. We filled this gap with this gap down. We filled that gap down as we gapped up. And yesterday you fell off, just getting a little bit better than minus 1%. And now we have another gap that will be created today, as the 5-day moving average worked very well yesterday for support until it broke at the very end of the day at 1530. And again, on those lottos that I pointed out for the SPX, they were around $1.65 over here. For very obvious reasons, they declined until you got here until 5 o'clock or 3 o'clock. And you finish the day there at 1574, or 850% above where that small price range being, because we had not had an expanded range. So today we're going to be, as of now, 5 o'clock, we're going to be gapping up around here in the 5220s. There are two different spreads to be looking at. They're in the spread room. Started posting them last night, getting $3 credit, because again, we're not really that good at doing this. 150%, 150%, 150% in yesterday's 52.25. When I threw it out there, getting $4, closed below 52.20, and that $4 credit, as you see over here, getting a $4 credit on a $5 spread means you're risking $1 to get $4, is a 400% return. So moving on here into where we're at, QQQ, floating around, not getting any kind of pressure, not getting any breakdown below that 442, and the 441 fake print still exists and is still alive and is still down there below the 10-day moving average. IWM doing nothing, absolutely nothing. This is looking at a 15-day view. Nothing whatsoever coming out of the IWM. Can't get 203.69, can't get 207.21. And I bring you over here to Trump Media and Tech Group Corporation. And I remember I had a screenshot for this of when the Donald Trump Hotel and Casinos, which used to trade under the ticker symbol DJT, filed bankruptcy well back in somewhere like 2010, 2008, something like that. It's still traded on the OTC market with a Q behind it, and they delisted it the week before Donald Trump filed for the presidential run in 2016. This is a 360-day view because that's the data that I can still get out of Thinkorswim. This is coming off of DWAC, and now going into 2024 and into now the 5850 first print of DJT, Trump Media and Tech Group. The real way to make money on this, the real way to make money on this is buy one share. After you've bought one share, you contact your broker and you tell your broker you would like your share to be converted into a physical share certificate. Once they've converted it into a physical share certificate, you will then receive a physical share certificate. And images. There it is. This is the DJT certificate from when it was Trump Hotels and Casinos Resort. You go out there, you tell them you'd like to have it converted into a share certificate. You get that share certificate, you go and you put it on sale on eBay or whatever it is. I will bet you will get a hell of a lot more than $58. So that's your way to fuck around with DJT if you want to involve. I'm over here on FedEx. The line I'm showing you here is 267, 267 being well below the all-time highs, which came here in summer of 2021. But this 267, as you can see it coming across all the way through, and how we reached up here in 2023, which I'll zoom in. We reached up here in 2023 in July, in September, and then we fell off. We broke up above it for a portion of a couple of days after earnings or into earnings back here in December, and we fell off, which was a big gap. I'll go on to the daily, 6 months. There's your gap. Here's your visit to 267. Here is your 1, 2, 3, 4, 5, 6, 7, 8 days up above 267 before the earnings gap down. And here is your move back up, which is now 3 days above that 267. And this is the reason why that 275 is a very attractive looking position for next week, considering it closed down at 30 cents yesterday. What we're talking about here is the April 5 Federal Express 275 puts that closed at 30 cents. That 30 cents closed a little. It was actually higher there on Monday, and it was flippable as you got that dip here early in the morning on Monday. And obviously, like I said, you don't need a large number of them. 275 is the strike. 262 is the gap. 268 is the line that I've shared to you. And thus, that's the reasoning why behind in the logic about Federal Express. The VIX. Actually, I'm going to go with the VIX, and I got to go backwards. The VIX. Got that 16. Got nothing. Down here right to 1255. Holding it. And here we are in this holding pattern. Well below 1339. And roughly threatening 1255 yet again. Because volatility the window has closed, and now it is a surprise if we are going to get any kind of volatility as we head into the long holiday weekend. Bring you back here to JP Morgan. JP Morgan, minus 3% decline off of that 200 bag holding hit, almost down to that 193.71. And again, unchanged. My view on JP Morgan, should this play out as exceptionally well as I expect it to, I would be looking for a revisit down here to around 186.40. And because it's April 5 and not April 12 when their earnings come out, there may not be enough time on this to get that 186.41. So we'll see. But as of yesterday, the bounce that took place looks very good, that we could be looking at the A wave down, the B wave bounce, and now looking for a C wave, which would take us somewhere into around the minus 190 area. So we will see. So having left off on that, I bring you over here to your futures, and I leave you with this. Here's your futures coming off of your FOMC move. I'm not a trend line artist, but I do use them for what I like to see. And I do see this fractionally expanding channel breaking above this trend line resistance where you're getting more resistance than you are getting explosions, breaking above, falling back down under it. Here we are trending towards that resistance line as we fractionally try and gap up after having dropped off from our highs overnight already. On the downside, nice support going down, little dip underneath it on Monday, bounce right back up, little dip right to it yesterday again. So again, does look relatively clean. Over onto the NQ, haven't touched the NQ, and the NQ is fucking very simple to see this because you're literally going nowhere. You're in this channel, and that's it. You're in that channel, and until that channel is broken, your big FOMC spike is all that you can look for, and this here having been untested with the now higher low over on there on the NQ. So get nothing to see there on the NQ, and bring you back over to the YM, where the YM has almost completely retraced the entire FOMC move, and that was why you've seen a lot of moves down on a lot of your big Dow names, Home Depot, JP Morgan, a little bit there on Goldman Sachs, McDonald's, Apple. So Time will tell, but that's where we're at. We've got a very compressed VIX with a very cheap looking forward kind of positioning. You are into your 16th trading session without a minus 1% decline. We are still in the 5200s where we have not had a retracement going back down. We have gone 150, 150, 150, 400% in this tremendous little chop zone over on the SPX. 20 points, 16 points, 13 points, 32 points. And we are now going into Wednesday having had 3 red closes in a row, but we are still here in the 5200s. Happy Wednesday, happy hamburger day, happy tell anybody that you don't like to go fuck themselves day. Enjoy your Wednesday because tomorrow is Thursday and you have Friday off.